Taking Stock with Pim Fox and Carol Masser. On demand via our Bloomberg Radio Plus app. Free for iPhone and Android devices.
You get lost, you can always be found. Just know you're not alone. 'Cause I'm gonna make this place your home.
A lot of people had that idea in 2007, 2008. And they still have that idea of buying a home. Tim Rood is a partner and managing director of the Collingwood Group, helping to advise and analyze investments in real estate worth over $1 trillion. He joins us from Washington, D.C. Tim Rood, great to have you with me on Bloomberg.
Hey, thanks, Tim. Good afternoon.
I got to start by saying, you're a former director at Fannie Mae, right?
Yeah, I like to say before it was a punchline.
All right. Yeah. Well, see, I'm not going to. But when you sort of like get in the car and you just kind of close your eyes for a minute and you think about all that's happened over, let's say, the last 4 or 5 years, how did we get here?
Well, that's a pretty big question. What I would say is, there was a lot of things that needed to come together, but ultimately, it seems to be a variety of self-interest played a hand. You had everything from buyers being homeowners and buyers being bought into this notion that there's never been a national decline in housing. You had regulators and investors who were satisfied to the same thing. Never happened before. Never been a national decline in housing. And ultimately, what you found is that there were products like these ninja loans, Nina loans, they called them, no income, no asset loans, that have been around for 20-odd years, but they used to be very expensive, and they had really onerous underwriting requirements for, say, high down payments or rigorous property inspections. So they always existed, but what happened during the run-up was that this kind of casualness that developed over time, that risk premiums deteriorated and the credit underwriting actually just evaporated. So, all resting on the fact that there would be national home price appreciations over and over again, and that the traditional proxies for creditworthiness were no longer applicable.
Should we just draw a line under all of it and move on, or is there something still to be gleaned from that experience that we haven't learned?
Well, I think there was certainly a lot to have learned. Most of the products, the loan programs that really caused the crisis have been legislated out of existence. So you really can't originate those types of loans anymore. I think that was the biggest issue. The notion that somehow the Fannie Mae's and the Freddie Macs or the FHA, in the context of companies with implicit or explicit government backing, caused the housing crisis, I think is a bit of a misnomer. And they were somehow dragged into a lot of the issues just based on a lot of their housing goals requirements. They had to participate in some way. These are monoline companies. But I think we learned a lot from the housing goals and the charters of these organizations that really incented them to create or to participate in some bad behavior.
In your experience, have Democrat and Republican Congress people, have they taken responsibility for their role in all of this?
No, I can't say I've seen a whole lot of the mea culpas in Washington in that sense. No, not at all. It doesn't seem like it at all. There's an argument that says on one side of the coin that the whole CRA, the requirements for community reinvestment loans, these loans that banks were required to originate to really kind of keep their charters in collecting deposits. I think what we found on the surface that those low to moderate income borrowers, higher risk borrowers, that on par with subprime borrowers that were really being originated by the Wall Street firms or whatnot, perform fantastically well in comparison. So I think that the politicians have taken some comfort behind that. But the sad reality is, the push towards home ownership, the American dream, while idealistic and valuable in terms of a wealth creation opportunity, has boundaries.
Now, you currently advise and work with bank originators, servicers, mortgage providers, and also mortgage technology, because a lot of this is now all automated, as well as government agencies. So you sit at a place where you can see a lot of different market participants. What do you see right now? Go through a couple of them and tell us some of your experiences.
Yeah, I haven't had a good night's sleep in about 5.5 years. So there's a couple of things going on. I mean, one of the things that's particularly concerning me, take the Chase settlement today, for example. What's concerning to me is, we've got these kind of disjointed objectives here in Washington where what's good for one agency, one regulator might be bad for another, and work at cross purposes to what politicians are trying to achieve. So the politicians on the Hill will tell you that, we need to get the government out of housing. That's bad for housing. It's unsustainable for the government and so on and so forth. Yet, at the same time we're trying to goat private capital off the sidelines and to take credit risks and invest their capital, we're basically demonstrating that they're going to do so at their own peril. And that the biggest idea and the most palatable idea associated with housing finance reform has an explicit government guarantee on it. Well, what kind of confidence and assurances do you think the private capital and investors have that insurance is something that they'll actually be able to make claims on without being arrested or being sued or having these massive settlements again right at the time when they need the capital? So I think that's one of the biggest issues that we're seeing. I think that the loss mitigation or the default management stuff, all of that is kind of working the pig is working its way through the python.
What can you tell people who think they know everything about the housing market, something that they probably don't know?
That's a great question. What I would say, Pim, is that housing has had a great recovery. We all know that it's at a biblical fall. I mean, in terms of it was off nearly 50%. It's on its way back, but I think the things that I don't see people talking a lot about that are clearly going to have an impact on the housing recovery are three main things. One is consumer confidence. You rarely hear about it, but it has been falling off of a cliff this entire year. And obviously, anxious consumers don't buy homes, right? So now that's going to certainly affect the demand side. If that continues to wane and react to the lunacy in Washington, then that's going to be bad for housing.
But Tim, let me just break in because you make a very interesting point. I'm wondering what could change, if anything, that would redirect people's emotional fears, because how do you change that kind of psychological makeup? Does people have to see their wages go up? What needs to happen in your mind?
Well, I think there's just like a systemic kind of, intolerable insecurity, right? Uncertainty. There is, if you look at, from a consumer confidence standpoint, how they think about their current situation is near recessionary lows. That means that they don't have great confidence in their current prospects. I'm not leaving my job. I might lose my job. But worse yet, Pim, is when you ask them, so what about 6 months from now? Close your eyes, click your heels together. How does that look? And it looks even more dire. So they're going to need.
Do you get that from the people that you interact with on a regular basis as well?
I do, but we see it secondhand from companies that are large servicers or whatnot that are seeing and having a dialogue with distressed borrowers. And ultimately, when you go through these forbearance plans or you try to say, look, okay, well, you can't make your payments now. Walk me through it. What do you think? 3 months from now, 6 months from now, with my help, do you think you're going to be able to dig yourself out? And there's a resounding, I wouldn't say no, but there's certainly enough uncertainty out there and lack of confidence that, it bubbles to the surface in a number of different ways.
All right, so you said lack of confidence. And there was something else I know you were getting at. I beg your pardon.
Well, so you have lack of confidence. You have what's called household formation. So every year you should be having about 1.5 million new households created just to keep up with population growth. What you've seen through the recession is that we actually had negative growth. It was only about 300,000, not keeping up with populations. Well, last year it boomed, and we all thought we were back on track to recover. Well, right now it is back again to about 300,000 to 400,000 households, which is your core demand base. If you're not creating new households because people don't have the money, they don't have the confidence, then they certainly is going to affect the demand side of the equation for housing, either existing or new home sales.
Should we recalibrate the way we think about housing in the U.S. economy? Because there are many countries around the world that have a very different relationship to the housing market, whether it's tax incentives or whether it's banking rules and regulations.
Well, ultimately, we've got to figure out what we want out of housing. Housing starts with essentially shelter. So once we get from a policy standpoint a strategic plan or just basically the end goal that we want as a country, do we want 50%, 80%, 10% home ownership? Why? You can build the operations around that and the policies to support that. But right now, we talk about everything in the abstract. We talk about housing in terms of home ownership rates. We talk about it in appreciation rates. But it's such a nuanced discussion, and it doesn't seem to be that we're having a kind of a thorough and complete discussion about all the things that are going to build up into either policy discussions or ultimately any of the reform that's needed to achieve some undefined goals.
If there was one thing that Tim Rood could offer or could convince legislators to do or someone to do, what would be the one thing that Tim Rood would change about the housing industry today?
Well, just like we put the GSEs, Fannie Mae and Freddie Mac, into a 5-year timeout, I'd love to see Washington take a 4 or 5 year timeout and just let the economy heal and let people get back to the ingenuity and the action required to really create a full-blown recovery. Just stay out of the way.
I want to thank you very much. Tim Rood, partner, managing director of the Collingwood Group, helping to advise on over $1 trillion worth of real estate, joining us from Washington, D.C.
Taking Stock, weekdays at 2 p.m. Eastern. In New York on Bloomberg 1130. In Boston on 1200 AM and 94.5 FM